Boom shakalaka, with contrarian indicators peaking and bullish signals for Bitcoin flagging. Today's video, we're going to take a look at where Bitcoin could be headed next. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're taking a look at Bitcoin, where the price could be headed, especially as a bunch of contrarian indicators are going mad and bullish indicators abound. Before we get into it, guys, make sure to like, subscribe, click the notification bell. Come join us on Twitter at @CryptoLove. Push that like button. Now, today, Extreme Fear 25. We're back into Extreme Fear territory. Pretty curious, especially as the markets have gone sideways and are up over the past couple days. As a matter of fact, over the past week, up about 2.5% for Bitcoin alone, even more than that for some cryptocurrencies. But right now, Bitcoin at 16,945, Ethereum at 1263, BNB at 261, XRP 34 cents, Cardano 27 cents, Dogecoin 7 cents, and Polygon 80 cents. Bitcoin right now breaking out of the wedge that it's been in for the past few weeks. Hopefully, it'll be able to stay outside of this area because there are some pretty significant resistance levels, like this pink one right here, about $17,500. This was the bottom from July that we would need to break through, and also close to $20,000 to break through, and the top of this descending wedge right around 18.8. So some key levels for Bitcoin to break through if price is to go up. Because if we take a look, there's some contrarian indicators that are flagging. You might have heard of this thing called inflation, maybe. Well, it turns out that inflation is peaking right now, could have already peaked, and historically, inflation peaks have coincided with major market bottoms. Each time we had a peak, it was very, very close to market bottoms and rallies that subsequently followed. As this inflation peaks, we might see a market rally following. Despite that, everyone is still pretty darn pessimistic. The investors expecting a stronger economy is at the lowest level ever. It's so pessimistic that it's optimistic. Yes, if you're a contrarian like me, you see stuff like this and you're like, wow, if everybody is betting on the market going down, it'll probably go up, or I'll just be wrong yet again. Now, right now, if we take a look though, the S&P has had a pretty terrible year. Okay, not to mention Bitcoin and cryptocurrencies having a terrible year, but the S&P, if we take a look, performs pretty well after a 25% drawdown, which it's had. Based on 10 drawdowns since 1940 of greater than 25%, the median price return the year following is 20%, which is double its normal return. We could have double normal returns. Now, Bitcoin historically has a 100% year-on-year return. That could, if this translates, mean a 200% year-on-year return for Bitcoin. That could be huge, because right now Bitcoin is sitting just above its 100-week point of control. You can see right here, Bitcoin price right now sitting just above 16,800 at 16.9 right now. And if we take a look, the 100-week POC is 16.8. Now, why is this important? This is where the most volume has been traded, which potentially forms a bottom. Historically, this has been the 200-week is at 9,200, which was the launch point for the last rally. The 300-week is the bottom from 2019. So these are very significant levels that we're looking at. Hopefully, this will be able to hold for Bitcoin, being a very large money traded level for Bitcoin. And if we take a look at just temporally, which means time-wise, Bitcoin this halving compared with previous halvings, we can see that historically in 2012 or 2016 here, or the average of 2012 and 2016, the bottom was already in. We're past the point of no return, past the bottom levels being in already. Could we be headed towards better things? Certainly could. January historically has marked the end of very, very bad bear markets. It actually marks the beginning of bullish markets. This is the time when tax selling, whales clearing their portfolios, etc., contributing to bear markets. Well, historically, January has always been the bottom. We can see this happen in 2012, where January was the bottom of that bear market, where 2014 was the bottom of that bear market, 2017, the bottom of that bear market. Now, the lowest price did not happen in January, but the price that January entered was never seen again in any of these cases. So, right now, right at about 16.8, we may not see Bitcoin coming lower than this in the future, which, cross our fingers, could be very, very good. Right now, it has been brought to our attention by TechDev and now by some other people that the Chinese economy may hold a missing piece of this puzzle for Bitcoin bull runs. It turns out that a move up in the Chinese 10-year yield has acted as a reliable trigger for Bitcoin bull runs. We can see this here. As the Chinese 10-year goes up, Bitcoin price goes up. Chinese 10-year goes up, Bitcoin price goes up. Now, it's not always. Sometimes the Chinese 10-year goes up a little bit before Bitcoin price actually goes up, as we saw back here in 2012 and also as we saw here in 2017. But we see this trigger flagging once again where the Chinese 10-year is increasing, could potentially be a leading indicator for Bitcoin price increasing. Despite that, though, Bitcoin's been going sideways. Price it's the newest stable coin. The coolest kid on the block, the newest stable coin out there is called Bitcoin. And what happens when the price goes sideways forever is the Bollinger Bands get tighter than ever. And we can see these are actually some of the tightest Bollinger Bands in years. If we go back to the last time that the Bollinger Bands were this tight and zoom out, look at this. This was right before Bitcoin price exploded from $9,000 to $70,000. Could we have the same phenomena about to happen? Certainly could. Bitcoin, taking a look at the 9 DMA on monthly charts, we can see it's flagging bull market territory. When the black line, Bitcoin price, crosses above the 9 DMA, the red line, historically, this has been the beginning of bull markets for Bitcoin. This just happened once again, suggesting the start of the bull run is on. Not only that, but this triangular patterns before parabolic moves. We take these Bitcoin triangles. Once Bitcoin price breaks out of that pattern, we have parabolic move 1, pullback, parabolic move 2. This happened back in 2012. This happened in 2015, 2016, and happening once again where the triangle has completed. We're at the intersection point where we now have parabolic move 1 and parabolic move 2 coming up. And if you just want one more, just a cherry on top, if we take a look, bullish divergences abound, but this one is pretty impressive. This takes a look at the money flow index, the amount of money flowing into cryptocurrency and Bitcoin price. Massive bullish divergence. Every single time in history this happened, there was a bull run to follow. If we take a look, Bitcoin price coming down, money flow index going up, that's a bullish divergence. Price, massive bull run. Okay, that's one. Number two, Bitcoin price coming down, money flow index coming up. Look at this, price going up, massive, that's two. How about this one? Bitcoin price coming down, money flow index going up. Guess what? Massive rally. So we have, once again, Bitcoin price coming down, money flow index going up pretty darn steeply. As a matter of fact, just as steep as we saw it back in 2015. Could we have another rally like we saw in 2017? That could be huge. I think we'll all be retiring at that point. So that's all for today's video. If you enjoyed it, push that like button. I'll catch you later. Have a good one. Love you. Peace.